Hey everyone, welcome to another exciting episode of Secrets to Real Estate Investing. And we have with us today a man on another continent. This is so cool. Today we have with us Mr. Billy Keels, who is living in Barcelona, but doing investing in the United States. So I'm really excited to welcome to the show, Billy. Welcome, Billy.
Hey, Holly, thanks so much. I'm really excited to be here, and I appreciate the opportunity to share a little bit about long distance investing with you and your viewers and listeners.
Oh, well, thanks for being here. I appreciate you taking your valuable time. And listeners, he's doing this at like 10 p.m. his time, and it's the middle of the day over here in California. So thank you, Billy. Appreciate it.
Yeah.
But there's a reason that it's kind of nighttime for you, because you still have a day job, huh?
Yeah, yes, I do. So this is about the time of the evening when I get started on the U.S. side of the business, and then I probably wake up first thing in the morning, usually around 5:15, 5:30, and do like an hour and a half, 2 hours as well on the real estate. Then I get into the I guess we used to call it the 9 to 5, but it's a little bit more than that nowadays.
Yes. Well, why don't you give our listeners your background, and tell us about yourself?
Yeah, sure. So I'm a guy from Columbus, Ohio, from the Midwest, who happened to be very fortunate to have great parents who did a lot of sacrificing for me and my brother and sister when we were young. Always taught us to be curious, to go out, meet new people, try new things, and continue to move forward. So I had a chance to, being from Ohio, went to university or college in southwest of Ohio. And then afterwards, I had this really cool job where I was working and traveling. And in 5 years, I'd worked and traveled throughout 58 different countries. So it was completely like out of this world.
Oh my
And
gosh.
what that did, I mean, it completely changed my perspective on things, that whole curiosity. I really had a chance to be even more curious, to learn more about people, new languages, new cultures, things like that. And that really inspired me afterwards I didn't want to go into a normal 9 to 5 job after having such an amazing experience. So I wanted to learn French. I wanted to learn more about wine, and I wanted to learn how to salsa dance. So I moved to Paris, France, did a 1-year sabbatical. I was supposed to head back to the States. One thing led to another, and ended up really enjoying the experience. Moved down to the south of France and started working in an IT company, started working for a company called Dell. I think most of us have probably heard of them or seen them somewhere, shape, or form. So I was there for a number of years, had a chance to move through the ranks, even had a chance to live and work in Italy, so with the sales team there, then went back to France. Along the way, I ended up meeting a very beautiful little Spanish woman, and eventually one thing led to the next. I left the south of France when I got back from Italy, moved to Barcelona, Spain. I've been here ever since 2005, and married 2 little kids. So very happy. And then along the way, I can tell you a little bit more. But that's how I got to Europe. And getting into real estate was kind of a different story. But I'm sure we'll get a chance to share a little bit about that.
So you went over to Europe for kind of an extended vacation and to learn some new skills, which I don't know if you were inspired by the 4-Hour Workweek book at all, but that definitely got my mind thinking of those things. However, I think I already had 4 children. I know I had 4 children by the time I read that book. I'm like, well, a little bit hard to kind of live all harder, not impossible. So that wasn't for me at the time. Mm-hmm. But yeah, I mean, what an amazing journey that you went kind of for fun and then ended up putting down roots, huh?
Yeah. Didn't expect that at all. And so, yeah, but it's been great. And yes, I did read the 4-Hour Workweek, and that was another kind of dimension shifter, so to speak.
Well, yeah. And for those who haven't read that lovely Tim Ferriss book, Tim Ferriss talks a lot about like, hey, don't think you have to work your whole life in a 9 to 5 situation or whatever, save your money, and then you're going to go travel around the world. You can do it now. It's surprisingly affordable, and sometimes you can work remotely. I mean, almost everyone can work remotely these days. When he was publishing that book a decade plus ago, it wasn't. But what was it that popped out about that book to you, and did you apply any of its principles?
Well, when I think about it, it's just the fact of the matter is he would, I remember him talking about the arbitrage, and being able to live in one place and leverage skills and talents in other places to be able to support a lifestyle. So I think that was one of the things, if I have to think back about some of the things that we're doing nowadays, is yeah, you can actually live where you want and the lifestyle that you want, and you're able to still create an income for yourself, but you just have to maybe go outside of what we've been taught in the traditional school system to be able to do that. So that was one of the things that definitely resonated with me and continues to resonate with me to this day.
Cool. Yeah, I'm sure we could do a whole show just on that. But let's get into the real estate investing discussion. How did you get interested in that? And tell us about your real estate journey.
So, how this was on the one side of things when I talked about the travel, and that was really, really nice part, and is a nice part. The real estate actually started from something that was a bit more sad, let's say, or a bit more kind of a heart wrenching, because I had, I've always been the type of person, you go out and you get your good grades and you go to school and you get in the great corporate job and you climb the ladder, right? And so I've been very fortunate. So I got good grades and I've been in great roles in big multinational companies and continue to move up the ladder. But in around 2000, because I, like most people, I took the money that I had and I maxed out everything I could in my 401k, and I put it here and put it there. And that was the only type of investing that I was doing at the time. And so after 2000, my stock portfolio went down. And so that didn't feel very good, right? Because I was like, I'm not in control of it. But I thought, well, I've been told, no, you just have to wait it out and everything will come back. And it started coming back. And then in 2008, like the whole thing crashed again, 2008, 2009. And I just got frustrated. It was like this, someone hit me in the gut again. And I thought, I can't keep doing this because I just don't have any control over what is happening with my finances. And I'm working really hard. So I decided I wanted to create a new alternative for myself. And I remember at a time I was at my dad and stepmom's, and they had this little purple book, which I'm sure many, many people continue to talk about it. I know I heard many other people talk about, Rich Dad, Poor Dad. And I picked that book up and I put it back down. And then a couple of years later, I picked it up again and actually brought it to Barcelona with me and read it cover to cover. And I was like, wow, this is amazing. And so what I wanted to do to get away from that whole lack of control of my finances, I thought, well, let me go ahead and try this. But because I didn't have it perfected, I thought I would go out and read more books and more books and more books and more books and more books. And eventually I had to take the plunge. I thought about buying an apartment here in Barcelona. And then all the concepts that I'd read in the book actually didn't translate from a cash flow perspective. And I think, I know for sure that the Barcelona market or many places in Europe are very similar to what you experience in California, right? So more of an appreciation type of a play versus cash flow. And so because I couldn't find the apartment, then I started looking at buying parking spaces. And the parking spaces, it was going to take me probably 45 or 50 years to just get the return of my capital, much less a return on my capital. So
wait, I've never heard anyone say that. What do you mean by parking spaces? One parking space, multiple parking spaces? What is that?
Yeah, so one parking space. So, and I guess it's pretty similar I know in New York City you can buy a parking space. And so, here in Barcelona, you may buy a parking space. It costs you 40 or 50,000 euros, which is more or less, I guess, probably around $45,000, something like that. And then you can rent that parking space if you live in the center of town. People that are working in the center of town, rather than parking on the street or parking in a parking lot or parking garage, they would rent your space. So, but because it was going to take so long, I thought, wow, this is crazy. And then one day somebody told me, well, Billy, you're an American and you have access to the U.S. market. Why don't you try to do that? And so thinking about the 4-hour work week and I guess these kinds of things. Okay, well, yeah, I'd always thought about buying a property right in the place that I live, but why not? And one thing led to the next. And that's how I started into real estate. The origin of getting started in real estate was because I was just tired of my portfolio crashing and me having absolutely no control over it. And I didn't want to listen to, well, just go ahead and wait for X number of years again. That kind of, if it happens once, shame on you. If it happens twice, shame on me. So I didn't want to do that again. I just needed to create a new alternative. And so this was the way that I wanted to do that.
Wow, that is really interesting. And I know nothing about the Barcelona market, so that's interesting to know that it's not someplace. And for somebody that may not know the terms, when you're investing for cash flow versus appreciation, why don't you talk about that a minute, and like different parts of the U.S., what's what?
Sure.
So California's appreciation, that means you lose money on a monthly basis, right?
Well, potentially. Yeah. I guess, and I think a lot about sports. So, and, I guess the thing that comes to mind, if anybody likes to play baseball, when you're thinking about baseball, you have, when you're on offense and you're going out to swing the bat, you can either hit a grand slam or a home run, and everybody's, super, super excited when you hit that grand slam because, you've made this amazing place. You've either gone by yourself all around the bases or you and three other people. And so I like to think about the appreciation markets, because when things are really, really nice, it's happy, it's great times. At the same time, when you're usually swinging for the fences, as we like to say, for the grand slams, there's also a high possibility that you can strike out. So when you strike out, it doesn't feel so good. Very similar to the appreciation, the highs and the lows that happen in a market like California or like New York. Whereas where I'm from, Columbus, Ohio, or the Rust Belt, you go for more base hits. It's just very simple. Some would say boring, but there's a higher possibility of getting base hits after base hit after base hit. So I guess if I had to think about the United States, if you look on the edges of the United States, you typically are going to have your appreciation markets, and when you're in the middle, where it's a little more boring, kind of like I guess me from the Midwest, you get the base hits. So that's the way that I would describe the appreciation versus cash flow. The cash flow are the base hits.
Yeah, that's true. And a lot of people talk about the 1% rule. The 1% rule, if you haven't heard it before, not you, Billy, but I mean, a listener, what that means is you want to get 1% of your purchase price per month in rent. Well, in my neighborhood, you can buy a home for $1 million and you can rent it out for about probably $3,500 a month. So 1% rule would be like, well, you'd want to make $10,000 a month, but you're only getting $3,500 a month. Yeah. But so the 1% rule doesn't cut it here on the coast. But a few years ago, inland, in an area called Inland Empire, like we were able to buy homes in Riverside that met the 1% rule. So I paid $150,000 for a house, including fix up, and I probably rented it out for like $1,400 a month, $1,300 a month. But now the rents have gone higher. So the 1% rule worked 3-4 years ago in inland areas of Southern California. But in Texas now, I'm sure you can pay $100,000 for a house and probably rent it out for $1,200 a month. So you're doing better than the 1% rule. And Columbus, Ohio, I don't know if you know what's going on there. I don't, but are there areas where you can even do up to 2% maybe?
I was gonna say you could you could do 1.5%. There are also some areas in Columbus now where 1% rule you're doing well. Very similar, but isn't that great that's like one of the greatest things about real estate. I mean, you can be focused on cash flow, you can be focused on appreciation, you can be focused on what's in between. And as long as you understand the market that you're operating in, you can really create a play for yourself or for your investors that makes sense. I mean, that's one of the things that I really, really love about real estate compared to, when it was just in the stock market, everything was buy low, sell high, buy low, sell high. I mean, there are other things that you can do a bit more sophisticated in the stock market, but the basic principle is that. And when you're in real estate, if you understand what it is you like to do and why you like to do it, there's almost so many different ways. There are lots of different ways that you can go out and actually create that reality or that alternative that you're looking for.
So you led right into my next question. What was your plan? And did you follow it, or did it have any changes along the way?
Wow. So my plan was initially, so I'm one of those people that I like to write goals down, and it just helps me. It's also one of the reasons that I've learned 5 languages, because I like to, visually, I like to be able to see new words and new things, and my sales quota, same kind of thing. So I wrote down in 2000, and I think it was 2012, like October, November of 2012, I wrote down that I wanted to be able to purchase 10 properties and be able to create 4 figures of net income. And I wanted to do that in a period of 5 years. And so doing that from so far away, I thought, well, this seemed reasonable. And that was my goal. And once kind of got started, was very, very fortunate to have had a team around me, and we were able to get to that goal that I'd set over 60 months, 60 months, and we did it in 18. So
Awesome.
yeah, so I mean that was the goal, and learned a lot along the way, and made a lot of mistakes, and still make mistakes, but just not the same mistakes over and over again. And I make less mistakes because I also wanted to go out and work with mentors and people that have already done the things that I want to be able to do. And yeah, so that was it. That was the goal, and we were fortunate enough to be able to achieve that goal.
So what do you invest in? Is it multifamily, single family? What do you do?
So we invest in multifamily properties. So that is our focus area. It's what we like to do. Fits best with I guess initially it started out with what is for the best focused area for me and the skill set. And it's also something now that we are seeing that has attracted investors to the multifamily type of things. We don't typically, we're not really focused at this point on the larger, and I consider larger properties 200 units or above, and we tend to stay out of that space for the moment. I mean, maybe we would get in that space eventually, but right now we like the smaller properties, smaller multifamily properties.
And what areas do you own your properties in and look for properties?
So we've done a lot of studies across the U.S. in cash flow type markets, and some of the different markets that we have looked and studied. Probably no big surprise to you, Holly, but markets like Philadelphia, Atlanta, Georgia, Indianapolis was on the radar, Columbus, Ohio, but all of the cities, or even Philadelphia, where we currently have properties, is just outside of the Philadelphia MSA. Though our real focus right now is on the Charlotte MSA, or metropolitan statistical area. Just think of the greater Charlotte area is where we really, really like right now. We're focused there, and our investors like the Charlotte market as well.
And what makes you like versus not like an area? What do you look for?
Yeah, so the number one thing that I like to look for now, because there's also, remember I told you there's been an evolution. In the beginning, I just bought a place because I had the money to buy it, and that's not necessarily the best way to go about it. Like to look at first of all, what is the trend? Is the trend that there are more people moving into a place versus moving out? So something called net migration.
Okay.
Is something I really like to look at and understand. Also like to look at what is behind that net migration. What is the driver? So what are the jobs? Typically, people like to move to a place because there is a way that they can move and sustain their family or their lifestyle or whatever that may be. And then from the jobs is really the diversification of jobs, which is one of the reasons we really like Charlotte. I mean, you have everything from the financial services sector with companies like Bank of America, BB&T. You also have companies like Lowe's in the retail area. You have energy companies, you have logistics companies. So there's a lot of diversification of jobs. So where people are moving, the jobs that are behind them and what types of jobs are in the area are some of the really high level things that we look at. And then of course we drill into a lot more beyond that. But that's really what we like to look at to get started.
That's great. So have you always focused on multifamily, or did you ever do single family?
You know, in my mind, after I read Rich Dad Poor Dad, I only thought of single family. I didn't even think multifamily was an option. And I've never purchased a single family residence. So they've only been duplexes or quadplexes and a little bit larger. But so it's only multifamily that we focus on, and that was by more accident than anything, because the very first property that I identified, or that my team identified, was a duplex. It was a lady who had inherited her home. So she did not want to live in the home that she inherited. She wanted to be able to move to the Atlantic City coast. And just so happened that I was looking for the market, and my realtor found the deal and got me involved, and one thing led to the next, and we started out with a duplex. So
very nice.
Yeah.
Never owned a single family. Wow.
No,
okay.
No.
Unusual. So many people springboard from that into multifamily, but hey, why not go bigger if you can, right?
Yeah, it just kind of happened. It kind of happened that way, and I guess I didn't know any better, and so I thought, okay, well, yeah, sure, let's go.
Great. Why don't you tell us, what, in your opinion, what are some of the most or the biggest investment mistakes that most people make?
I think very similar to maybe what I did in the beginning, is because I had the money, working in a corporate job, and the money was there, and I you know, when you read the books and you see what's happening, you just think, okay, well, I have the money, so let me just go out and spend the money on it. And you're not necessarily really getting educated on what could happen. Simple things like due diligence. I mean, I'd read the books, but the books don't really tell you about due diligence. What is a strong due diligence process? And depending on if I haven't, because I'm not in the US, there aren't courses that I can go to and be in a RIA meeting every single week, and they talk to you about these kinds of things. So sometimes having the money and not having the knowledge can be more dangerous than doing it the opposite way around. So I would say one of the biggest mistakes is looking for the cheapest, quote unquote, cheapest property to get involved in. If you don't know what you're doing, those cheap properties can be really, 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 really expensive. And I know that because I've talked to people who've, used 70, 80, 100,000 to put in or buy a property, and it turned out to be a disaster for them afterwards. But they learned a lesson.
Elaborate on that just a little bit. Like, what are the potential problems that could happen from that?
If you imagine, and I speak to people all the time where they have, mentioned before, so it could be as little as 50,000 in a savings account up to $500,000, these kinds of things. And when they want to move into a property, I was just talking to somebody recently that bought an $80,000 property, but when they bought the $80,000 property, they didn't actually realize that there were a bunch of structural issues with it. And so what they thought was really inexpensive, because it was only 80 grand, it's going to cost them a whole lot more than 80 grand, because now they're still in to figure out how much it's actually going to cost to get things fixed. So that goes, I guess the way that I would view that is it's that part is not so much about money. It's really about understanding what you're getting yourself involved in.
Yeah. I mean, there's a reason that there have been homes for sale, at least in the US, for as low as $1 or $1,000. It's because they kind of have a negative value. They're going to cost more to solve the problem than they will be worth after the problem is solved. So buyer beware. Yeah, yes. For sure. It is possible.
Get educated.
Yeah, if it seems too good to be true, it might be. Maybe. Yeah. Well, as we're getting here near the end of the show, I'm really excited about what you're offering our listeners for our free download this week.
Yep.
Your 10-point checklist to help people determine if they're ready for passive investing. So why don't you tell us a little bit about that?
Yeah. So one of the things that we start realizing, because we're talking to so many different people, and a lot of people that I speak to, they're working in corporate jobs, and they've been established in, corporate jobs for 10, 15, 20 plus years. And they've gone through the same roller coaster ride that I went through. And when you don't really know where to start, sometimes you just need some help. It's as I mentioned before, it's the education piece. And it's just thinking about creating different streams of income. If you love your corporate job and that motivates you and you want to stay in that, well, stay in that. I mean, definitely stay in that, do what you do best, what you like. And if there are also at the same time, you can create other ways to create revenue or streams of income, then look at that as well. So this is it's a really simple checklist to help people understand where they are or how they can create passive income for themselves, different areas that they can find passive income, and also gives them an opportunity to figure out, how conservative or aggressive they like to be from an investing standpoint. So it's very simple, very easy, and sure that that everyone will get lots of value. At least we get to sit down and think about some of the things to create new revenue streams.
Awesome. Well, thank you for providing that. So listeners, you can grab that free download at hardhatholly.com/94, because we're show number 94.
Wow.
And you can also text to the number 38470. So on your phone, you dial 38470. You're going to send a text, and all you do is put in the word hard hat with no spaces, hard hat for Hard Hat Holly. And you'll get on our little notification blast every week of new podcasts being out, and you'll get this free download and our past downloads as well. So text hard hat to 38470 or go to hardhatholly.com/94. That's also where all our show notes are going to be, with all the links that can connect you to Billy. Billy, why don't you also talk about your site, your book, and what else, why people might want to get in touch with you and learn more from you?
Sure. I mean, anybody who is, especially someone like me, who's been in a corporate job for quite a long time, and you want to think about things from a different perspective. Not saying stop doing what you're doing, but just how can you create new things? I'd always like to speak to people. It's one of the things I've been doing a lot recently. You talked about the book. Actually, in last year, had a chance to have a book published. It's an ebook. It was an Amazon bestseller when it came out, so that was a really kind of exciting. It's on Amazon. You can buy it, but Holly, I would like to be able to offer it to your listeners and viewers.
Awesome.
In order to get that, they just need to go to growyourmoneythesmartway.com. That's the name of the book, and they can just leave their email and they get the book that way. If anybody would like to speak, maybe they want to pick up the phone, happy to have a call with you. It doesn't matter where you are in the world. You just need to go to bit.ly/speakwithbilly. We can get on a call. And if anyone just wants to check out the website and see what we're doing from a long distance investing perspective, they just need to go to keeponcashflow.com.
Yeah, and that's spelled KEEPON, just like it sounds, keeponcashflow.com.
Yep.
Because who doesn't want more cash flow, right?
Right.
I love it. Okay, well, do you have any final words of advice for our listeners as we sign off here?
Yeah, actually, before the advice, Holly, I'd just like to thank you for continuing to spread the word and give so many of us the opportunity, depending, different walks of the real estate life. You're opening up your knowledge and wisdom with everybody and giving people different perspectives to think about. So I'd like to thank you for that first and foremost. And then I would also like to just say to anybody, it doesn't matter where you are in the world. If you have the desire to get involved in real estate from whatever perspective that is, whether it's flipping, whether it's wholesaling, whether it's cash flowing, you should be able to do that because especially if no matter where you are, just don't have any self-limiting beliefs, or try to work on minimizing them and surrounding yourself with people that are going to help to inspire you and push you to take action. So that's, I guess, what I would like to leave anybody with that's watching or listening.
Amen. Well said. Well, thanks for your time, Billy. And listeners, get out there, take some action. Go take this little checklist quiz of Billy's, see where you're at, find what's right for you, and create some cash flow, some wealth, and make it happen. Thanks for listening.
Awesome. Thank you.
Hey there, thanks for watching the video. Make sure you like it and click subscribe to get notified of more videos. And you can go to hardhatholly.com for a free download on secrets to finding great deals.